The July Consumer Price Index (CPI) report indicated that the inflation rate in the United States rose by 3.2% from the previous year, slightly lower than what was expected. Here are the key points from the report. The Consumer Price Index increased by 0.2% for the month, which was in line with expectations. This marks the first increase in over a year and is higher than June's rate. The core CPI, which excludes volatile food and energy prices, also increased by 0.2% for the month, matching expectations. The 12-month rate for the core CPI was 4.7%, the lowest since October 2021, and slightly below the consensus estimate. The majority of the monthly inflation increase was attributed to rising shelter costs, which increased by 0.4% and were up by 7.7% from the previous year. Rents also rose by 0.4%. Food prices increased by 0.2% for the month, while energy prices only increased by 0.1%, despite surges in crude oil prices. Used vehicle prices declined by 1.3%, and medical care services were down by 0.4%. Airline fares also fell by 8.1%. Real wages, adjusted for inflation, increased by 0.3% for the month and were up by 1.1% from the previous year. While inflation has come down from its 40-year highs in mid-2022, it remains considerably above the 2% target set by the Federal Reserve. This suggests that the Fed is unlikely to cut interest rates anytime soon, despite the relatively positive inflation trend. The central bank has raised benchmark interest rates multiple times since March 2022, and while some officials have indicated a pause in rate hikes, the overall outlook remains uncertain. Economists are divided on whether the U.S. can avoid a recession, with some major financial institutions suggesting that the risk of a contraction is decreasing.